Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome back to another exercise tutorial series for our managerial accounting course, ACCT 428. In this playlist, we're going to go over the exercises we have selected for this chapter, chapter number 3, starting with exercise 3-1A that we are going to cover in this video. So let's read the exercise together. It says, Danica Corporation produces products that it sells for $40 each. Variable costs per unit are $25, and the annual fixed costs are $360,000. Danica desires to earn a profit of $150,000. What's required? A. Use the equation method to determine the break-even point in units and dollars. Okay? So, before we start working on this exercise, let's quickly remember our key formulas that we're going to be using, or we're going to need to be able to solve this exercise. Starting with the equation method, or the main equation that we use, which is the basic contribution income equation, which states that sales minus variable costs minus fixed costs should equal the profits. Okay? And based on that, of course, we can break down some of the terms as we have learned in our lecture. We can break this total sales figure into sales price per unit multiplied by the number of units. And we agreed that we're gonna use the letter N to indicate the number of units. So that's going to be the first term. The second term, which is the total variable cost, we can break that down into variable costs per unit, again multiplied by the number of units. Okay? And then we could also take our fixed cost, because for our break-even calculation we're gonna assume that the profit is 0. So what we do is we move the fixed cost to the other side and change its sign. So that's gonna be equal fixed costs plus profits. Okay. Now if we look at these two together, we might remember that the selling price minus the variable costs equals the contribution margin. So we can further adjust our formula to become contribution margin per unit multiplied by N is also going to equal our fixed cost plus our profit. Okay. If we also rearrange this, that will take us to the contribution method formula, which is N equals the fixed costs plus the target profit, or the desired profit, divided by the contribution margin per unit. Okay, so these are all the formulas that we need for this particular exercise. So let's have them all right here organized so we could use them. Alright, so let's start working on our solution. For part A, remember, the question said use the equation method to determine the break-even point both in units and in dollars. So remember that we said that the break-even point is the point where the profit is equal to 0, right? So what we're going to do, we're going to use our formula based on the data that we were given in the question. The selling price per unit is $40 each. The variable cost is $25, and the fixed cost is $360,000. Okay? So A, the selling price is 40, multiplied by the number of units. We still don't know how many units, so we'll just use N, minus the variable cost per unit, which is $25, multiplied by N, okay, minus the total fixed cost, which is $360,000, should equal 0 because we are looking into trying to calculate the break-even point in this case. Okay? Now all we need to do is to just simplify this, where we will have the contribution margin per unit, okay, which is basically the difference between the selling price per unit and the variable cost per unit. And then we'll also move the fixed cost to the other side and change its sign, right? So 40N minus 25N, that will be 15N. That should equal $360,000. Now all you need to do now is just go to your calculator and run the numbers. So in order to have, remember this is what we're trying to find, N. So we need to remove this number right here. So the way to do this is to just divide both sides by 15, right? So 15N divided by 15, that's going to give us N. And that should equal 360,000. That's what I'm going to calculate on my calculator here, divided by 15. And that's going to be 24,000. 24,000 what? N equals 24,000, so that's in units. Okay? Now that's the first part of the requirement A. Remember, the requirement also wanted us to find the numbers or the break-even numbers both in units and in dollars. So we found the units required. Let me change the color here. Now we also need to find the break-even points in dollars. Okay, so I'm going to write here break-even point in units. And now the break-even point in dollars is going to equal N multiplied by the selling price per unit, which was $40. Okay, we already found that N is equal to 24,000 units multiplied by $40. Run the numbers on a calculator. 24,000 multiplied by 40, and that's going to be $960,000. And that is the break-even point in dollars. Alright, so those are the two requirements for part A. Now let's go back and read part B. It says, determine the sales volume in units and dollars required to earn the desired profit. How much was the desired profit? Going back to the question, you can find it right here at the last sentence in the question, which is $150,000. Remember, just like we have discussed in the lecture, this is simple. You're basically going to redo the whole calculation, but the only thing you need to do in each formula is to just add your desired profit to the fixed cost, whether you're using the formula or you're using the contribution margin method. You're just going to add the desired profits where right next to the fixed cost. Okay, so part B, using the equation method, right here. So sales price was $40 N minus the variable cost, which was $25, again multiplied by N. Okay, minus the fixed cost, which was $360,000, should equal, not 0 this time, it should equal 150,000. Okay, now rearrange your formula. So 40N minus 25N, again that's 15N, should equal, I'm going to move this to the other side. That means this should equal $150,000 plus $360,000. Okay, that means 15N is going to equal, how much is that? 510,000. Okay, and now divide both sides by 15 and you should get your answer. So 510,000 divided by 15, and that's 34,000 units. Okay, now all we need to do is just multiply this by the number, or by the selling price per unit, to find the required sales to achieve the target profits, right? So we'll take, we'll call it the sales in dollars equals the selling price per unit, which was $40, multiplied by 34,000 units, and that will give us 40 multiplied by 34,000 equals 1,360,000. And this represents the amount of sales that the company needs to achieve in order to reach its target of securing a profit of $150,000. And the number of units that they need to sell in order to achieve that target is 34,000 units. Okay, that is it for this exercise. This is how you can solve question or exercise number 3-1A. If you have any questions, as always, feel free to drop them down in the comments. I'll try to respond to each and every comment. And until I see you in the next exercise tutorial, take care.